Market's up, Chuck. And today's blog was titled Internet Icons, and I wanted to look at these two. Both of these companies are in the news quite a bit right now. Google, is making a lot of noise about changing their advertising, getting into the mobile phone business, and eBay, the other Internet icon, is showing some good sales strength now, and so on. But the reason I wanted to show these companies was really to point out that it's the individual company, not the general stock market, that really matters the most. 15 years ago, eBay didn't exist. They started publicly trading in 1998, and I want you to notice their earnings growth has been exceptional. They've increased earnings year after year after year, one flat year, which of course was 2005, and then they had a nice acceleration after that. But Google has grown earnings at an amazing rate of eBay has grown earnings at an amazing rate of over 48% a year compounded. The company has no debt on the balance sheet, and if you bought eBay when it started here 13 years ago, $100,000 on September 30th, 1988 would have grown to $1,218,000. That's a 25.5% compounded growth rate versus only 0.2% compounded for the stock market. The stock market would turn $100,000 into just under $102,000, where eBay would have turned $100,000 into $1.2 million. That's an amazing record over the last 13 years, and clearly shows that it wasn't the stock market, it was eBay. And I want to point something else out. This is measuring eBay at the lowest price earnings valuation, or among the lowest price earnings valuation it had ever traded at in its entire history. So it's not about the stock market, it's about the individual company. If we look at Google, which is less than 10 years old, you see Google has grown earnings during this period at over 72%. Again, has no debt on the balance sheet, and $100,000 invested in Google on August 31st, 2004 would have grown to $477,000. That's a 35.9% compounded rate of return over the last 7 years, and that's during a period where the stock market actually would have lost a minus 1.1% compounded. So the point is, the stock market had very, very little to do with what Google shareholders earned. It all comes down to the individual company. What's interesting about both of these stocks, as I mentioned in the blog, is neither one existed, just slightly more than a decade ago, and yet here they are. Google has over $118 billion market cap, and eBay has over almost a $30 billion market cap, and these companies have come from nothing to become some of the most powerful franchise brand names in the entire world. There's some interesting opportunities to look at the Internet. The Internet, I believe, is still in a nascent stage, but I would encourage you to do your homework. There's a lot of ways you can research both these companies, but I think they're some excellent examples of how the stock market has very little to do with investing. It's all about the individual companies. It's Chuck Carvell saying thanks for listening. Talk to you again tomorrow.